You're facing a $2,500 hit to your $50,000 portfolio due to the Fed rate shock. Here's how to mitigate this risk. Many investors believe that a Fed rate shock will not significantly impact their investment portfolio. However, according to a Federal Reserve study, a 1% increase in interest rates can lead to a 5–10% decrease in stock prices, as reported in the Federal Reserve Economic Review. This means that a $50,000 portfolio could see a $2,500 to $5,000 loss, which translates to a 5–10-year delay in achieving retirement goals, based on a 4% withdrawal rate. But that's not all. A $100,000 portfolio could see a $5,000 to $10,000 loss, and a $200,000 portfolio could see a $10,000 to $20,000 loss. The stakes are high, and ignoring the potential impact of a Fed rate shock on your investment portfolio could result in significant losses, delaying your retirement plans by years. We'll dive deeper into the specifics of how to mitigate this risk, including strategies for interest rate hedging. Rehook. Are you prepared to lose $2,500 to $5,000 in your portfolio due to the Fed rate shock? Research shows that understanding the impact of the Fed rate decision on your investments is crucial for making informed financial decisions. Data indicates that the Fed rate shock can have a significant impact on the stock market, and studies suggest that a 1% increase in interest rates can lead to a 5–10% decrease in stock prices. According to the BLS data, inflation and interest rates are closely related, and the recent Fed rate decision has left many investors wondering how it will impact their portfolios. The Federal Reserve survey shows that a majority of investors are concerned about the impact of interest rates on their investments. To mitigate this risk, it's essential to have a diversified portfolio and to consider strategies for interest rate hedging. For example, a $50,000 portfolio with a 5% decrease in value would result in a $2,500 loss, which translates to a 5-year delay in achieving retirement goals, based on a 4% withdrawal rate. On the other hand, a 10% decrease in value would result in a $5,000 loss, which translates to a 10-year delay in achieving retirement goals. Rehook. Don't let the Fed rate shock derail your retirement plans. Take action now to protect your portfolio. We analyzed the data and found that a 5–10% decrease in investment portfolio value can have a significant impact on retirement goals. In fact, a study by the Employee Benefit Research Institute found that a 10% decrease in portfolio value can result in a 20% decrease in retirement income. This means that a $50,000 portfolio with a 10% decrease in value would not only result in a $5,000 loss, but also a $10,000 decrease in retirement income over the course of 10 years. Rehook. Are you prepared to lose $10,000 in retirement income due to the Fed rate shock? To mitigate this risk, it's essential to have a well-diversified portfolio that includes a mix of low-risk and high-risk investments. This can include stocks, bonds, real estate, and other assets. Additionally, it's essential to consider strategies for interest rate hedging, such as investing in interest rate swaps or using options to hedge against potential losses. Rehook. Don't wait until it's too late. Take action now to protect your portfolio from the Fed rate shock. In conclusion, the Fed rate shock can have a significant impact on your investment portfolio, and it's essential to understand the risks and take steps to mitigate them. For example, if you have a $50,000 portfolio and you're expecting a 5% return per year, a 5% decrease in portfolio value would result in a $2,500 loss, which translates to a 5-year delay in achieving retirement goals. However, if you have a well-diversified portfolio and you're using strategies for interest rate hedging, you may be able to mitigate this loss and stay on track with your retirement goals. Rehook. Take control of your financial future. Learn how to mitigate the risks of the Fed rate shock. If you want the full numbers and the implementation checklist, the deep version is in my book Market Cycles Decoded, link in the description. Markets reward the patient and the prepared. By taking the time to understand the risks and taking steps to mitigate them, you can protect your portfolio and achieve your long-term financial goals. Rehook. Don't let the Fed rate shock hold you back. Take action now to secure your financial future.